Hi guys, and welcome to another week of State of the Market. As you all know, I am Marc and I am joined by my lovely co-host Jennifer Budol. And this week we have a jam-packed episode on the latest findings across the Australian real estate investment market. Now over to Investment and Development, Crown Group's Managing Director Iwan Sanito and Bill Burge's Managing Director John Kinsella have discussed the year ahead, with both developers preparing for the return of foreign buyers. Sanito has said the past 2 years, with the international market being in a position of collapsing. However, there is one key motivation and driver, that is, prior to the pandemic, ensured foreign buyers wanted to purchase properties in Australia, and that was education for their children. Now, investment in Australian real estate from China has declined significantly from its peak of almost $32 billion in 2016 to now $7.1 billion in 2020. However, Asian acquisition of Australian residential real estate is expected to return to growth in the second half of this year, being 2022, as political and macroeconomic headwinds all moderate.
Great. According to a recent report from July IQI Holdings, foreign buying, including acquisitions made by permanent residents, is expected to reach pre-pandemic levels in Australia by the end of 2022. However, foreign investors who generally favour city locations from a lifestyle perspective are usually limited to purchasing new properties or developments unless they are really residing in the property. Wilburger's Managing Director John Kinsella endorsed the view of incentivising foreign investment through observing stamp duty surcharges post-pandemic. Kinsella said most of our buyers now aren't coming from China, and there really needs to be more thought given to treating foreign buyers in a similar way to local buyers without the extra surcharges. The state government will really need to intervene to ensure we incentivise foreign buyers to bring them back into force.
Yeah, I think that's a very, very good call there. So guys, with the heavy rains that are going on, the war in Ukraine and sharp rise in housing volumes failed to slow Sydney's auction market this week, with the preliminary clearance rate rising by 1.3 percentage points over the week to 76.9%. Data from CoreLogic shows this. But the surging stock levels, which rose by 18.7% from a week ago, and waning buyer demand took a toll on the prices achieved under the hammer. In this week to February 27, which was Sunday just gone, Sydney's median auction sale price fell 1.1% to $1.494 million as some vendors adjusted their price expectations. A total of 3,384 homes were taken to auction around the combined capital cities, up by 16.7% over the week before. Across the smaller capitals, Adelaide was the best performer, with its preliminary clearance rate jumping to 85.4%, followed by Canberra with 75.7% and Brisbane with 72.7%.
Great. So we know that both Melbourne and Sydney are diminishing in the valuation trends based on the daily index. Therefore, Sydney prices might fall slightly and Melbourne could report a flat reading this month. In the strongest markets like Adelaide and Brisbane, we could see that the trend is easing off slightly, and I believe that is a clear understanding that the market is going to continue to soften as inventory levels are rebalancing. We also understand that the war in Ukraine would probably affect consumer sentiment at some point, which will for sure drift the demand for housing. With this being said, the market is actually cooling at the moment. As mentioned before, this is certainly a positive for us here at JR Prosperity, as it gives our investor clients time to prepare for the next wave of investment in the market throughout 2022 and 2023. Looking back at the trends of 2020 and the global pandemic, not one country was able to confirm what was going to be expected. It was seen that the recession was something we moved in and out of very quickly. There has also been some aftershocks of COVID-19 across the globe, but more importantly, in today's day and age, we see an immense investment bounce back, and we believe that is going to occur throughout this year and post-Ukraine war.
Yeah, so guys, look, I think if you would like to understand more on how we can further add value to your current portfolio, or if you are a first-time investor looking to get into the market, please feel free to reach out to either Jennifer or myself today so we can go through an incenting and deep discovery of what it is that you're trying to achieve. Now, that's it from us this week. I think that's all from Jennifer as well, but if there's anything else, guys, feel free to comment down below, ask us a few questions, and we'll certainly be here to answer your questions. Until next week, thanks, guys.